Hey everyone, and welcome to this explainer. Look, if you're a serious, analytical trader, you already know the golden rule. Your strategy is really only as good as the infrastructure it runs on. So today, we're popping the hood. We're going to completely deconstruct the institutional-grade infrastructure of IC markets. We're talking about a platform that processes over $1 trillion in trading volume every single month. And we're going to see exactly how it's built specifically for the retail trader.
But right off the bat, we've got to talk about a really common frustration. Have you ever felt like your stop loss was literally being hunted, or maybe your orders just mysteriously slip right when the market starts moving in your favor? Well, the truth is, a lot of traders lose money not because their strategies are bad, but because of bad broker interventions. Things like hidden slippage, delayed execution, and manipulated pricing that can absolutely destroy an otherwise profitable system.
Okay, let's dive right into this. You see, the root cause of that frustration is usually what's called a dealing desk or market maker model. In that kind of setup, the broker is actually taking the opposite side of your trade. Think about it. If you win, they lose. It's a fundamental conflict of interest. On the flip side, the true ECN model acts as a direct bridge to the real market. Their only goal, just to facilitate your trade as quickly and efficiently as possible.
To see how IC Markets actually fixes this, we're going to run through their engine step by step. We'll cover their true ECN model, ultra-low trading costs, millisecond speed and liquidity, top-tier regulation security, and wrap up with their complete trading ecosystem.
All right, kicking things off with Part 1, the true ECN trading model and direct market access.
Think of this as the high-performance engine of your whole operation. ECN stands for Electronic Communication Network. Basically, a true ECN is like a VIP express lane straight to the global financial markets. By using a pure no-dealing desk system, IC Markets completely bypasses that traditional broker toll booth. Your orders get routed straight to the interbank market. That means no manual intervention, no artificial requotes, and absolutely nobody sitting at a desk deciding whether or not they want to accept your trade.
And this brilliantly illustrates where that pricing actually comes from. They're aggregating live prices from over 50 top-tier liquidity providers. We are talking about global mega banks here, JPMorgan, UBS, Goldman Sachs, alongside massive non-bank providers like XTX Markets and Jump Trading. By forcing all these heavyweights to constantly compete for your order, the system naturally prevents price manipulation. It practically guarantees you're getting the fairest, most accurate market price at any given split second.
Moving right along to Section 2, ultra-low trading costs to help you maximize your capital.
So IC Markets basically gives you two main ways to structure your costs, depending entirely on how you trade. If you're a scalper or if you run algorithmic expert advisors, the raw spread account is custom built for you. You're getting those raw market spreads in exchange for a very competitive flat $7 commission per round turn. But if you're a beginner or, say, a swing trader who just doesn't want to deal with calculating commissions on every trade, the standard account bakes the cost into a slightly wider spread starting from 1.0 pips with zero commission.
But wait, let's just zoom in on that raw spread for a second. 0.0. For major pairs like the Euro-US dollar, the spread actually hits an absolute zero on a regular basis. If you're a high-frequency trader, starting your trade without instantly being in the red because of a wide spread, that is a massive game changer. It literally means every fraction of a pip in your favor is pure actual profit.
But here's the thing. A zero spread is completely useless if you can't actually enter the market fast enough to grab it, right? That brings us to this number. Under 40 milliseconds. To put that into perspective, the human eye blinks in about 300 milliseconds. So your trade is executing nearly 10 times faster than a literal blink. In this kind of environment, speed and cost absolutely go hand in hand.
Which naturally leads us right into Section 3, millisecond speed and liquidity, focusing specifically on that sub-40 millisecond execution.
So what's the secret to that crazy speed? It's literally physical location. IC Markets doesn't just use standard internet servers. Their hardware is physically co-located right inside the Equinix NY4 data center in New York and the LD5 center in London. These are the exact same highly secure buildings that house the servers of the global liquidity providers themselves. By using direct fiber optic cross-connects, they virtually eliminate network lag. Your trade doesn't have to travel across the globe, it just travels across the room.
So the crucial point is how this hardware translates into hard numbers. Get this, 99.9% of all orders are executed in under 1 second. And even more impressive, 99.5% of trades experience either zero or positive slippage. Plus, because it's a true ECN environment, they have a strict no requotes policy. For you, this means your automated strategy is going to run in the live market exactly the way you saw it run during backtesting.
All right, shifting gears to Section 4, top-tier regulation security. Because at the end of the day, your capital needs to be safe.
Depending on where you live, your account is going to fall under different regional jurisdictions, and each one offers its own specific protections. For instance, the Australian entity is heavily regulated by AISE, which is famous for its strict capital requirements. In Europe, they operate under CSEC, which actually includes an investor compensation fund. And for global clients who might be looking for more flexible, higher leverage, they operate under the SCB down in the Seychelles.
Let's actually trace the literal flow of a dollar here so you can see how this works in practice. When you deposit your funds, they don't just get dumped into the broker's general checking account. No way. They go straight into a completely segregated trust account held at a top-tier institution like the National Australia Bank, or NAB. This sets up an impenetrable firewall. Your money remains totally untouched by the broker's operational capital, which means it can literally never be used to pay for their business expenses.
And there's also the ultimate safety net for retail clients, negative balance protection. Imagine the market just flash crashes out of nowhere and gaps right past your stop loss. Well, the system automatically steps in and intervenes, ensuring you can never lose more than your deposited balance. You will never, ever end up owing the broker money.
Finally, let's open up the dashboard in Section 5, the complete trading ecosystem for tools and platforms.
Now, what's really interesting about this is the sheer freedom of choice. You aren't boxed into some clunky proprietary platform. You get full access to the gold standards of the industry. MetaTrader 4 for the classic algorithmic setups, MetaTrader 5 for advanced multi-asset analysis, CTrader for deep Level 2 order book visualization, and even seamless integration directly with TradingView. You don't have to change your habits. The broker actually adapts to you.
And once you're on those platforms, the sheer number of assets you can trade is wild, over 2,250 to be exact. We're talking 60-plus Forex pairs, precious metals with incredibly tight spreads on gold, global indices, equities, and even crypto CFDs like Bitcoin and Ethereum. You can cross-pollinate your strategies across totally different asset classes without ever having to open a second account or jump to another platform.
But honestly, here is probably the most important takeaway if you're a serious trader. IC Markets places absolutely zero restrictions on how you extract your profit from the market. Because they aren't trading against you, they fully support and actually encourage scalping, hedging, and high-frequency EA automation. There are zero minimum holding times. You can open a trade, close it 3 seconds later, and your profits are fully honored.
They also give eligible clients the tools to really maximize capital efficiency, offering leverage ratios all the way up to 1 to 500. This is huge for experienced traders who want to flexibly manage their margin and control much larger positions with a lot less upfront capital. Of course, you've got to remember that while high leverage magnifies your potential profits, it absolutely magnifies your risks too, which really is exactly why their rapid execution and margin call protections are so critical in the first place.
So, pulling it all together, the sources we've unpacked today really point to one clear conclusion. IC Markets isn't just trying to grab casual users. They've built an institutional-grade environment where your complex strategies can actually run the way they were intended to, and most importantly, where your profits can actually be withdrawn without friction. They're a professional ally for the serious retail trader.
Which leaves us with a final thought to chew on. Take a hard look at your current trading setup. Look at your spreads, double-check your execution times, and ask yourself this: are you ready to finally trade with the market instead of constantly fighting against your own broker? Thanks so much for joining me on this explainer, and I'll catch you in the next one.